Morning, everyone. Welcome to another Wealth Coffee Chat. Thankful Thursday. Terrific Thursday? No, it's terrific Tuesday. What is it? Marvelous Monday. Terrific Tuesday. Wonderful Wednesday. Thankful Thursday. Fantastic Friday. Anyway, hope you're all awesome and well. Good to see you all. There you go. Tim's in the house. We've got Chris here as well. Luke, good morning to you, mate. Brendan, Jeff, Kylie, great to see you. Luke, good to be out and about, team. Hey, doing a bit of socials, bit of research. Great to see all of you connecting digitally and also in the real lives. We've got some good things coming this year. Luke, Chris, we've got a few more activities, a few more events, excuse me, that we want to put on. And, it's going to be good. Anyway, good to see Ashley. There's Adrian. We've got Alison. Ashley's in the house also. Loving it. All right, team. Let's do this. I'll do some quick intros just while things are warming up. Most of you know this, but Jason Witt's my name. If you're new to the crew, give us a shout out in the chat. Say hello. Let us know where you are right now in the world basically. We do have a few people who travel a bit. We've got some people from overseas. We've got people from all over Australia. Let us know. Give us a shout out in the chat. Say hello. We've been doing this little thing called the Wealth Coffee Chat pretty well each weekday, around about 8:10. We kick things off and we usually have a yarn for about 15, 20 minutes, sometimes a bit longer because I rabbit on a bit. But anyway, over the years, done a few property deals myself, coached a few people, and learnt one or two things. And that's what I get the privilege to do, share a little bit of that with you as mad, keen property investors just like me. So hope you enjoy. Welcome along or welcome back if you're one of the regulars. There you go. All right, I might check that out. We do have a few, Kylie, we do have a few accounts going live at the same time, but I will have a look. Sometimes Facebook does some weird stuff. Anyway, there you go. What I wanted to talk to you guys about today is how long is it going to take for the market, the property market, to find its bottom, find its chill out point, find its retraction, find its whatever, and start to grow again. And we're going to sort of talk about that today, but we're going to sort of talk about it in terms of why diversification is pretty important. So we can, by and large, if we do it right, always have some growth, some wealth momentum in our portfolios as property investors, all right, as we go. But tell me in the chat, what numbers, what ludicrous percentages did any of you hear about the property market collapsing? The boom is over. The property collapse. Tell me, anybody hear some ludicrous numbers that you saw in the media? Tell me, what percentage did you guys see? Let me know, because there were some ludicrous things going around. From the ANZ Economist and from this person and that person and all these academic, or media types, the market's collapsing. 30% Tim's got in there. Yeah, the 30 to 40% mortgage cliff. I heard anywhere from 20% to 40%. And those are the numbers that these twits go on about every single time something happens in the real estate market, right? And like I've said many a times before, they probably don't even own property investments, like residential property investments. So, I wouldn't trust anyone who comments on anything if they don't understand it or own it themselves. The idea of you don't trust a skinny cook. If they're not eating their own cooking, well, I think you discount their opinion by at least 80 to 90%. That's my attitude. And, when was the last time they went and stood in line at an open home? When was the last time they went and tried to buy a property out in the market and went, oh, shit, everything's rubbish. There's nothing to buy, right? All they're doing, they're propeller heads looking at spreadsheets. And I do like a spreadsheet, by the way. I'm a bit of a propeller head myself. However, yeah. I love that one, Alison. That's a good sticker. Don't take criticism from someone you wouldn't ask advice from. Yeah. Be careful who you ask advice from or value the opinion of. Anyway, the older we get, hopefully, the better we become when it comes to understanding these things. But let's just have a look at the history and maybe a call or an answer that might surprise you. All right, tell me in the chat. Before I get into it today, tell me in the chat, how many months or years do you think right now it's going to take for the property market to get into positive territory again, like to start growth, the median or average price or whatever the general dollar and cents is? How long do you think it's going to take? Give me it in the chat. In terms, you can do months, you can do years. Tell me what you reckon. Now, am I in focus? While you're doing that, I'll try and see if I can be in focus. Anyway, let me know. What do you think? What do you think? You reckon it's going to take 6 months, 12 months, 2 years, positive growth territory? What's your thoughts, opinions? What do you feel? Whack it in there. Hey, Jeff's already all over it. All right, good, Jeff. Anyone else? Anyone else got some thoughts? It's already started. You lot know too much. I can't trick you with any of my questions. You're on it. You're all over it like a rat up a drain pipe or whatever it is. Listen, a dog on an ice cream that has fallen on the ground. Whatever. You're on it, team. It's already happening, folks. And this is the thing. This is what, as a property investor, as a capitalist, I am a capitalist. I do like the idea of making some money, being on the right side of the ledger and, paying a little bit of it forward. You guys know I do a lot of things with schools and education. But listen, folks, it's already underway. What is going on in the world of our property market? It's started already. And the thing is, what many of us maybe might not understand, and I'll do my terrible drawing of Australia, and we won't forget Tassie. Yeah, it's hideous, isn't it? You'd think I'd get better at this over the years, but anyway. So there's my very average drawing of Australia. And when we talk about marketplaces, when we talk about the market and lots of the media and whoever, opinionators who really don't know their bum from their ear, their ass from their ear, when it comes to actually, it kind of looks like a tooth, doesn't it? They don't really understand what's going on. Now, when we look across Australia, they're different markets, right? Thanks, Brendan. They're different markets, and this is the thing. The Australian property market is not one big market, right? So let's talk about what we believe with that, and why diversification is so important. Because in the world of property investment portfolios, over time, you might have, a market that's gone down, a market that's gone up, a market that's going flat, a market that's going up. And for you and your portfolio, you want to smooth out the trend of your value growth. You don't want your growth cycle to look like this. You want it to look like this. And a constant trend upwards for your value is how we can use diversification. And there's other things as well, saving money on land tax and bits and pieces. So let's have a look. It's already started, team. What's going on? And how long has it in the past taken to recover back to positive territory? Okay, back to positive territory in the property world. Now, maybe we should have a little look in a second of how far it's gone down. Let's tell me in the chat, and depending on what stats and who you listen to and whatever, but in general, what has been the actual median price adjustment? So the median price adjustment, the real house price adjustment in percentages from the high and how much it's retracted. Okay. Don't worry about this rubbish from high to top. And it was growing at 20%. Now it's growing at, negative 2%. So that means it's a 22% fall. That's tosser. That's tosser stuff. That's bullshit. Complete and absolute drama queen manipulation of, people who think that person's smart and they're actually being stupid. But yeah, Jeff's saying 5 to 8%. We'll have a look at that in a minute. Yep. Max 5%. Right. Actually, let's just do that quickly. We'll jump to it. Check it out, team. Right. Check it out. The adjustments, I haven't got the last one in here. At this moment in time, the adjustment is just shy of 5%. Okay. Just shy of 5% from a high to a low. Okay. So for all of us, I'll come back here in a minute. For all of us, okay. The median price had retracted a small amount. How long has it taken, or how long has that retraction happened? Well, when we look in the past, and sometimes looking in the past is pretty good because you can go, all right, well, how long did it take people to recover from, some issues and shocks in the past? Well, let's go all the way back to, what's the furthest one here? 1991. 1991. Well, it took 28 months. So that's, what's that? 2 years? 2 and a bit years to recover over a period of time. So 2 years, the longest in the past. Now, I want you to notice something. As we go back to, or go into the future. Yeah. As we go into the future, 1995, 15 months. All right. 2009. Oh, actually, 1983. Where we go? Oh, that was the oldest, right? 10 months, 28 months. 2009, 8 months. 2012, 13. 19 months. 2019, 20. 10 months. There we go. So from a negative point, which is, the median price retracting going down, doesn't mean every property went down. Doesn't mean every market went down. That's the issue with these media opinion types. Maximum time frame has been 2 years. Most of them, folks, has been under 2 years, between 12 months and 2 years, right? So when we talk about property, when we talk about, owning real estate, when we talk about these things, from a growth point of view, and remember, your capital growth is, I would call, like an ego measurement of your real estate. But what it does, capital growth gives confidence to the market. For you and I as property investors, we know owning that property, you're going to own it forever. Buy well, do not sell unless it's strategically for a reason. We've talked about that. Well, your cash flow is the most important thing. Hang on. Oh, bit of a sneeze snuck up on me. Listen, 2 years maximum. However, the one right now, the market is already back and going, folks. It's already off and running. So let's have a look at what is going on, right? So in general here, I think this is the February overall house price growth. And where are we here? 2023, right? Like the downturn very small. No bigger than 5%, depending on which stats you ask. Dr. Andrew Wilson was 4.8. This is 3.8, depending on the types of properties as well. Now, if you have a look at this, in here, the unit market adjusted less than the house market. Okay, well, that's pretty interesting. Now, this is domain.com and Property Track, which is RP data. So they've got some good data. But did every market go down? Did every market adjust? Team, no. There's a couple of markets in 2003 that have been in the positive territory. In the the property prices grown. So when we listen to the market, the media talk about, the market's gone down. Well, the one that adjusted the most in red here was Sydney, right? Now, the thing is, you'll notice in a moment that Sydney is off and running. It's in positive territory again already. So when we talk about our property values, when we talk about safety and diversification, listen, folks, if you owned a property in Perth or Adelaide and you owned a property in Sydney, Brisbane, Melbourne, Perth, and Adelaide, Sam talks about the 5-city strategy. Well, 2 of your cities were growing. 2 of your cities were growing when everyone was having a whinge about property prices going down. That is why diversification matters. That's why it's important. That's why understanding it's not one market, it's many markets. If you go to places like Newcastle or Wollongong, or you go to places like, large regional towns that are worth entertaining, investing in, they've gone up as well, right? So the lesson is this. Don't listen to those tossers because they have no interest in being accurate or helping you make sense of things. But also, diversification works really well, flattening out your growth over time and also your income over time. And the property market does not fall or react 40% like those people are talking about. Anyway, that makes sense, right? That makes sense. So let's have a look at, these things here when we have a look at which of the cities, if we say, all right, okay, here's the retraction, here's the growth, here's the retraction, et cetera, et cetera. And that's the whole market, the upswing, the downswing. Well, let's go and have a look at, over here. Check out the growth in some of these cities, 50%, 50%, 40%, 28%, et cetera, team. So imagine across the board with your portfolio, if you had, Canberra, Perth, Brisbane, Sydney, where did Melbourne go? That must be Melbourne there. Melbourne in the middle, right? So that's where diversification, that's crazy, Brendan. 2.6 million in Marrickville. Well, that's what's going to happen, folks. So Sydney is already off and running in positive territory. What happens when the population goes up? Well, the population is already increasing. You guys know we're going to catch up. See, there's a gap in here. We're catching up by the end of this year, early next year. Oh, it won't be $1 million. Well, that's all right. 1 million people in Australia extra coming in, new migrants, right? And already Sydney is up. This is the positive territory for Sydney. Change. See here, actually that one. The rolling month average, Sydney's up. All units, houses, units are going up because it's more affordable. But check it out. The capital city average across the country, combined units and houses, is back in positive territory. Team, there we go. There we go. Hey, what do they say? What's that? Ding dong, the king is dead or something. Anyway, interest rates are on pause. We're already in positive territory when it comes to growth, recovery, and rents are skyrocketing. You guys know my opinion. This started 6 months ago, right? You guys know what I've been talking about for ages. Ding dong, the witch is dead. That's right. It's out of Dorothy and Wizard of Oz, isn't it? Okay. Yep. Thanks, team. You got my back. So what are you doing? Hopefully you're not sitting around waiting for prices to get cheaper and, I'll wait till things change. Listen, that's a chump's opinion. That's you got to get on with it. If you can, you should, because it's only going to get more expensive. The choice of your real estate's going to get less and less because they're not producing things. There's going to be different headwinds in investing this year and next year, and it's going to all be attached to construction, folks. It's going to be attached to construction. There's going to be problems and things we need to navigate as investors when it comes to construction, production, building properties, etc. But if you know the right people and you get in the right circles and you do the right things at the right time, you're going to be well ahead of the game, folks. Yep. That's right, Brendan. There is money out there all over the place. Yep. There's money in the system. If you can get it, you should. Make sure you plan with your coach and you be safe and smart and all those things. But it's time to crack on, folks. Time to crack on. We knew this was going to recover anyway. You go back and have a look at any of my Wealth Coffee chats over the last 6 to 9 months. I spelled it out. Like we had a look at the cash rate. We had a look at the bond. It was all right, it's going to pause at around about this. So what happened? It's paused. What may happen is we have a significantly large amount of mortgages coming off the fixed rate in the next little bit. Let me quickly pull that up. Where are they? I'll show you here, right? Let's have a quick look at this. Now, have a look at, what's going on there? It's gone blank on me. Anyway, it's saying it's not going to do it. Or my internet's gone absolutely tanked. Anyway, that might be it, folks. It might be over. All right. It doesn't look like things are working here at my end. I better call it quits. My internet just pooped itself. All right, team. Spelling Cliff. Well, okay. Can you hear me still? Let me know. Anyway, it looks like things are still got you. Okay. All right. I can't show you this thing, but anyway, yep, the Spelling Cliff. Over June and October, team, is the largest amounts of fixed mortgages coming off the fixed rate, okay? So the RBA is pausing. We're going to see what goes on. One more month of inflation figures going down, and I think we're done. We could get 0.25% later on. The cynics are talking about that. The market doesn't think so. The market's not pricing it in. You guys know I've talked about the aggregated opinion of the marketplace. It's not economists. We don't listen to those idiots. Anyway, I'm done. I better stop talking because I'll just roll into my next subject, which is over the next couple of days. All right, join me tomorrow for another Wealth Coffee chat. Let's do this. I'm done. Join me tomorrow. Tomorrow it is. If you're up for it, let's do it again. And we can have a good time. All right, folks, that's it from me. You guys be awesome and well. Remember, this thing's a marathon, not a sprint. It takes time. Listen to the right people and do the right things. And buy well, don't sell. Keep the bloody things. Leave your properties alone. Go and get a hobby. Anyway, there you go. Adios. See you tomorrow. Bye-bye.